And it's 10 a.m. right here in Lagos, Nigeria. Good morning, good evening, wherever in the world you're watching from. It's Business Morning live on Channels Television. Let's kick off now with the markets. Now, we see oil prices down today in Asian trade. See Brent crude that lost about 78 cents to 0.94%, trading at $82.34 a barrel, while U.S. WTI futures that dropped 95 cents, about 1.20% to $78.21. We'll see what's driving prices later on the show on the global oil market. To grains now, we see Chicago grains wheat futures lost more ground today as supply concerns ease with inspections of ships carrying Ukrainian grain resuming in the Black Sea region. The most active wheat contract on Chicago Board of Trade, WV1, that fell about 0.7% to $6.88 for a quarter of a bushel. Soybeans, SV1, gave up 0.4% to $14.72 for three-quarter of a bushel, and corn CV1 lost 0.1% to $6.35 for three-quarter of a bushel. And the Federation Account Allocation Committee has shared a total sum of 714.629 billion as March 2023 Federation Account revenue to the federal, state, and local government. The amount includes gross statutory revenue, value-added tax, exchange gain, and electronic money transfer levies. The federal government received 276.141 billion naira. State governments received 232.129 billion, while local governments got 171.257 billion naira. And a total sum of 35 billion was shared to the relevant states as 13% derivation revenue. And Lagos State government has signed an agreement with Lagos Commodities and Futures Exchange on aggregation of paddy and distribution of sales of finished rice. Speaking during the signing agreement at Alausa Ikeja, the Special Advisor on Rice Initiative, Mr. Oluwarotimi Fashola, says the partnership between the state government and Lagos Commodities and Futures Exchange will help sustain continuous supply of paddy for Immortal Rice Mill Initiative. Also, the Managing Director, Lagos Commodities and Futures Exchange, Mr. Akinsola Keridoluale, says the agreement will help play critical roles in the area of finance, provide liquidity with a target of 5 billion naira for the first batch, and provide 30 billion naira is expected to be raised within 6 months. Take a listen.
The partnership, first and foremost, gives us the ability to have paddy, and with paddy comes the head rice. Without the paddy, that's the rice paddy, we can't have the head rice. That's one. Two, it gives us the cost of paddy at a competitive price, so we can have the head rice at a competitive price. So it's what we buy that will sell. So with the consistency in the partnership with Commodity Exchange, we can continually be in production at a competitive price of paddy and have the head rice sold to the populace at a competitive price. So you realize that, one, we have availability. It's not going to be cornered by one merchant and hoarded. It's going to be spread to different distributors, and that goes to the retail shop. It's going to be at a price that is competitive, not necessarily controlled. Because usually control is a bit negative in Nigeria. So it's going to be at a price that is affordable. Our price, I can say without doubt, that for the value of the quality will be almost like subsidizing, because we'll be selling a high product at a price that is not comparative to the quality of the rice, so that the masses can have a benefit of it. The citizenry of Lagos can have a benefit of a good rice at a good price. So there are already the rice in the market, which is a core rice, but what we're going to start off by the end of this month is a commercial sales of the rice.
When you partner with the private sector, what you see is you have what we call succession. You have structured planning, and you have continuity in whatever you're doing. And that is what is bringing to fore the issue of public-private partnership arrangement, whereby the private sector will participate effectively well and create economic continuity and capital raising. And like you've mentioned, we are engaging in capital market operators today to participate, so that there will be a link between mobilization of funds towards the rice mill and the capital market. And everyday person can participate in the structure that's been put in place. You can also trade as an individual in this rice through the capital market, through the exchange now, and you can also buy and benefit from it. So I think those are one of the few benefits, apart from the fact that now what that does is that, apart from the on-budget things that Lagos has to do, Dr. Fasta was talking about 100 billion. It means that can be off budget for Lagos State. It can be a standalone transaction, and of course to continue growing in that particular space and be creating the multiplier effect of the economic of scale and grow the ecosystem for Lagos commerce.
Market update now. We have Bolanle Agbaje, Senior Analyst, Financial Derivatives Company, joining me for the second time this week.
Hi,
great to have
morning.
you.
Thank you.
Bolanle, so last time we spoke, there was still volatility in the oil market,
yes.
and it still remains, and it's down.
Yeah,
today.
It's down
What's driving
today.
sentiment?
So it's just the fact that everyone is anticipating a hike in the upcoming Fed meeting, and obviously that translates into higher oil prices and more or less reduces oil demand in the long run. But what we've seen is the forces of demand and supply keep driving, the oil market, and we hope that oil prices does not go beyond or below $80 per barrel, because they've done so much to boost oil prices. I'm talking about OPEC this time, boosting oil prices above this $80 per barrel, and if it goes down again, and it seems like there's nothing significant driving it, it means that they'll probably go back to the drawing board and look at what production is saying. The good news for us in Nigeria here is the fact that our oil rig count has increased to 15 from 13, so that's about 15%, and that's great for us. So it just means it's a signal. So it means that oil production is supposed to increase in the short term. So that's great for us because our quota is currently at about 1.8 million barrels per day. So anything that helps us meet that target is good, and we can benefit.
With the way it's looking, it almost seems like we're going to hit that level.
I hope we do.
We're standing at about 1.6 million barrels. So what's 1.8?
But the way it is in Nigeria, security remains a challenge, and it comes in at times when we least expect it. So we just hope that there's and obviously, like I mentioned on Tuesday, the Kwaibo terminal is down at the moment. So we hope that we don't have force majors like this bringing our oil production down. So it's good that our rig count is up, and we just expect good news from here on.
Looking at LNG prices there, we've seen that downward movement for price action. That started earlier this year, late last year.
Yes.
It's still going down, lost that $3
Yeah, there was a rally yesterday,
level,
yes.
But now we're seeing some
So
movement.
I think the trend is with LNG, we're seeing warmer weather, you don't expect, you expect the demand for LNG to drop marginally. But towards the middle of the year, from about Q3 up until the end of the year, the demand more or less picks up. So there was a summit yesterday, an oil and gas summit at Abuja yesterday, and the MD of Nigerian LNG actually mentioned that, our gas supplies in Nigeria has reduced significantly in the past 2 years. And that's because of the insecurity challenges that still continue to plague that particular industry, and lack of funding, new investments in that industry as well. So we're not necessarily doing well. And they mentioned the fact that, the US, Qatar, they're signing long-term contracts at the moment. And usually you see this kind of situation happening towards the middle of the year in order to secure production or ample supply towards the end of the year where the winter weather usually comes up. So we're not benefiting from that. And it's quite sad. And we do hope that the new administration more or less does something about the insecurity challenges, the pipeline vandalism and all of that. So for the fact that the MD has actually mentioned it seems like their hands are tied and we can't even boost up our production past a certain level.
Now, looking at the oil and the LNG market, we've seen most gains from last year practically given up at this time, almost back to, the pre-war level. So do you see a rally starting soon.
Yes, definitely. As demand picks up around the world, we definitely do expect, it's the same demand supply fundamentals that affects the oil market also affects the gas market as well. So it just depends on where the demand is staying at the moment. So when you see demand go up due to weather, the weather situation, you definitely expect prices to respond, except, we see more or less warmer weathers as a result of climate change that is not necessarily paying attention to anyone at the moment. So if it's that case, then it means that the expected demand that most of these countries, expect would, and obviously their gas stocks would not necessarily be used, and that would obviously feed into prices or signal lower prices.
And talking about feeding into prices, we see cooking gas prices here still high at this point.
Yeah, so that's obviously because we're not seeing the supply in the market, and the demand has increased, significantly in the past 2 years. We had seen, the effect of the COVID situation even double the expectations of demand that wouldn't have been there if COVID, did not happen. So gas prices is been a bad situation for us in Nigeria, and it seems like many individuals in Nigeria are more or less, just accepting the new normal, except something significant changes with supply in the market.
Something definitely needs to change in that market. Let's look at cocoa prices now. We see that rose by 0.71% in the global market there. Looks like it's a tight supply.
Yes, tight supply in Ivory Coast. So cocoa prices right now, it's currently at about 2,900. We hope that it crosses the 3,000, region, because that's great for us as a country that actually produces cocoa. The Cocoa Association of Nigeria, although they mentioned recently that, or they're pleading with the new administration that they should impose a new legislation that, plays into the standards and the quality of cocoa that is being produced. Although, in 2011, they had already signed, a contract with the Research Institute of Nigeria, the Cocoa Research Institute of Nigeria, to produce new variety of cocoa seedlings that would more or less boost our production to about 750,000 tons. But that wasn't the case, because now they're claiming, lack of funding, so they're not able to increase the production of the seedlings, and farmers are not obviously receiving that. So our production is currently stuck at about 250,000 to 280,000 tons. It's not necessarily great, but the fact that quality is a big issue for us. And they also mentioned that the Standard Organization of Nigeria should, hamper down on substandard fertilizers that are being imported into the country. So a situation or an area that the government probably would be looking at is the production of fertilizers. I know Dangote is one of, the major producers of good fertilizer. So we just expect more of this supply in the markets that can aid, and not just the cocoa industry and many other, commodities within Nigeria.
Yeah, let's look at wheat now. We see wheat prices. It looked like you wanted to start rising at some point with issues around that grain deal, but we're seeing prices come down.
Yeah, so we're seeing increases of wheat production in, major producing countries like the United States, Brazil. So that's obviously is feeding into the market, and obviously that's great for us as net importers of wheat. And although we're not seeing that translate into the final products like bread, but would appreciate any fall in price of.
Paying a lot for bread.
Yes, everyone is still paying a lot, and it's just there's still price stickiness with some of those products, and I guess it's because of our exchange rate as well. Even though you're seeing the fall in prices of some of those commodities that we do import, the exchange rate situation is still feeding on and increasing the cost for many manufacturers. So we're not feeling the reduction in the prices for some of those commodities.
And the battle against inflation continues. South Africa's data there's 7.1% in March. Definitely not good for us.
It's not, because we trade with South Africa. We import, I think, delivery trucks, some commodities like apple and pear, and I think our total South Africa contributes about 2.9% towards our total trade. So anything that happens in South Africa regarding price would more or less be translated into imported inflation, and that's not obviously great for us. And many other countries that are facing higher inflation rates. So it's bad news on that end.
It's a double whammy.
double whammy for
at
us.
this
Yes,
point.
yes, definitely.
All right, let's look at the Naira now. We see it slipped the 0.27%.
Yes.
It did gain.
It did
the
gain,
last time
yes.
we spoke, but now
right now is about
it's down again.
740. We're not really seeing increases in our forex, or obviously we've mentioned some of the products that we do supply, and we're not doing great with attracting or investors into the country and also increasing our supply outside of the country. So that obviously is feeding into and I think I would also think, with this holiday period coming in, there's increased demand. I know banks have been complaining that the demand for forex is astronomical right now. So obviously that would feed onto the price of the Naira.
And public holidays tomorrow.
Yes, it
Muslim
is.
Brothers and sisters. What are you seeing for domestic commodity prices?
So it'll be nice to see what happens at the end of or the beginning of the week next week. What we do know is ordinarily you see increased purchase of some of those domestic commodities that people like to consume during this period, and we do expect that to translate into higher prices.
Higher prices. Definitely don't want to see higher prices at this point because we're still battling inflation. But thank you so much, Bolale Agbaje, Senior Analyst, Financial Derivatives Company. Thank you.
Thank you.
All right, we'll take a moment now. Back. Well, the Central Bank of Nigeria announced that the total currency in circulation increased by 701.4 billion naira in March 2023 to a total of 1.6 trillion naira. This increase is coming on the heels of the Supreme Court's judgment in February, which compelled the Apex Bank to reverse its earlier implemented currency redesign policy and extend the use of the old notes until December 2023. To discuss the expected impact now, we have Damilare Ashimi, Head Investment Research, AfriInvest Consulting Limited, joining me via Zoom. Great to have you on the show.
Yeah, good morning, Ladi. Thanks for having me.
So Damilare, how would you assess the impact of the cash crunch in the first quarter of 2023 as impacted the economy? And to what extent do you think the recent increase in currency in circulation, what impact will that have on the economy's prospects going forward?
Yeah, thank you once again. So as regards the impact of the currency crunch that we experienced, especially in the first 2 months of the year, I think we can broadly dimension the impact or the effects in two broad categories. Talk of the economic impact, talk of the social impact. Now, speaking to the economic impact of the currency crunch we experienced in January, the Nigerian economy has been established to have about 40% of its GDP from the informal sector. And if you marry that statistic with the fact that as at the last time FINA last released its financial inclusion data, I think in 2021, we have about 38.1% of bankable adults. Total estimated bankable adults then was put at about 106 million, and 38.1%, nearly almost 36 million, are completely financially excluded. Only 44% are captured in the formal banking sector, while the rest are the formal sector. And bulk of this large adult population are those that make up the informal sector. So the more interesting thing is that even though the informal sector accounts for just about 40% of our GDP, the sector is the largest employer of labor, running up to more than 70%. So the formal sector only accounts for barely about 25 or thereabouts. So the issue, the currency scarcity formal sector the most in Q1. So meaning that about 40% of the economy was under severe pressure because of the currency crunch, because these are people who majority of them are not in the formal banking services, do not have access to using banking facilities, and even the banking facilities was also under severe pressure during that period. So by and large, based on our own estimate, we believe that the economy might likely have contracted in Q1 because of that currency crunch, especially with the huge effect coming from the informal sector, where we have more than 70% of labor force coming from, where we have 37% or 38.1% rather, not being captured in the banking sector. So And the other impact that the currency crunch also had on the economy, especially those in the informal sector, is that it also imposed a sort of indirect tax on people. People have to pay money to access their own cash. For instance, we have cases of people who have to let go of 3,000 of their own 10,000 before they're able to access 7,000. So by and large, it affects both demand and supply, mostly in the informal sector, and the effect is not palatable. And based on our own estimate, we're estimating perhaps about a 0.5 to 1.2% GDP contraction, 0.5 in the base case in Q1, year-on-year relative to 2021. Now, speaking to the fact that post Supreme Court judgment, the CBN have gradually been releasing more credit. Right from time when the CBN came up with this policy, in many of our notes released in November, December last year, we've always picked hole in the policy, in the sense that we have analyzed it from the perspective of how the Nigerian economy is structured and the size of the informal sector, and we already knew that this policy would do more harm than good, especially in the immediate time, given the structure of the economy. But the CBN has gradually been releasing more currency to be in circulation, which in the first instance is actually the reason why money is printed. Money is printed not because it should sit in the vault of the bank, but it should move around for people to transact. And when you look at the size of the currency that the CBN is trying to withdraw from the economy, it's very new. Before the policy came, we only have just about 3.2 trillion in circulation. That is barely less than 2% of our GDP. And so you look at an economy of almost 169 trillion. Why is 3.2 trillion in circulation a problem? And even if you compare that to broad money supply, which is about 55 trillion now, that is very small. So basically the fundamental of the CBN's argument around mopping up liquidity through reducing currency circulation is largely flawed because you have a large informal sector. But as the CBN continues to push out more currency, the informal sector activities begin to recover. We expect that the economy will perhaps perform much better in Q2 than in Q1.
Yeah, we do hope more money is actually pumped into the economy at this point. But one other argument for introducing the currency redesign policy was to help with reining in inflation. But it looks like we're still seeing inflation rise. We're at 22% level now. Would it have been worse without the policy?
I really don't agree. I think the policy itself also helped in exacerbating inflation. You recall that in December, we actually have inflation moderate for the first time in 11 months in 2022. The only moderation in inflation we recorded was in December. And this policy, the effect took toll on the economy in January. Now, like I mentioned earlier, there was an indirect tax or erosion of purchasing power that policy itself imposed on an individual who has 10,000 want to collect their money, they have to part with a certain amount. If such person is also to sell goods to other people, they will have to inflate price in order to be able to reduce their cost. So the policy actually also stoked inflation indirectly. And again, it has been established, and we have published so many reports in this regard, that Nigerian inflation is driven more from the supply side than from demand side, because Nigeria is an economy that depends largely on importation. So when inflation is high in the external environment, you go there, you import so much, will actually bear the brunt. So what the focus of the CBN and the fiscal authority should have been is how to drive agendas, how to drive policy that will help increase local production. You can talk as many commodities as possible that you can think of. There's virtually no commodity that we are self-reliant on, that we don't import. So in order to fight inflation, Nigerian inflation is more of a supply side problem, more of a structural issue. We talk about bad road, people who import, who need to clear their goods from the port, having to spend more than what it costs them to import from China, from Europe, just to move that commodity from port in Lagos to maybe Ogun State or Oyo State. So basically, those are the structural things we should focus on and deal with to tame inflation, not to reduce the little currency that people need to have access to. And the other time I mentioned that the currency crunch experience in January had both economic and social impact. Some of the social impact that cash crunch had on the economy in January is that some people lost their loved ones because they needed money to get things to keep them alive, but they could not access it. So basically, it inflicted more cost, and I don't think it was in any way help the inflation dynamics, because the root cause of our inflation is more of structural problem, it's more of supply side than demand side.
Talking about the type of inflation we're experiencing here, that it's more of supply side. Do rate hikes help with supply side inflation?
So the recent rate hikes, right? If you look at it on the balance of analysis, it even makes things difficult for producers because for every time there is an hike in rate, the cost of borrowing goes up, and it becomes difficult for businesses to be able to sustain that on their balance sheet. For instance, some 2-3 years ago, there are a lot of businesses that was able to raise liquidity, whether from through a debt or overdraft from bank, at just barely 10, 11, 12%. But now, to raise that kind of amount, because the MPR reserve is 18%, there will be a markup from the end of the bank to accommodate for risk. So it means that the least average, you can see a prime lender get facilities now will be about 20%. So when your cost of fund is 20% and above, how do you expect that kind of business to be able to do well? Knowing fully well that the same business that will pay 20% interest on cost of fund will still have to fuel its engine to buy itself, power operation through a very high cost energy source, have to still pay for staff and a lot of things. So basically, the interest rate hike is actually also not very palatable for businesses. But again, when you are fighting inflation, because you just have to be very resilient, you have to be very stern, because when the economy is slowing down due to the fact that inflation is dragging purchasing power, if inflation is not addressed on time, the effect will not affect everybody. So what I'm saying is that inflation can even lead to more of a devastating effect than tackling. So basically, from a theoretical perspective, trying to hike rate to tame inflation is justifiable, because inflation can cause a lot of damage. But again, you want to fight it, or you want to fight inflation from an holistic perspective, not just to hike rate, because hiking of rate should be temporal. In the US now, they're already considering that after the next Fed meeting, where they expect rate to be hiked again, there should be a pause for a while so that the economy will feel the effect of the series of hike and shape the economy back. But for Nigeria, that kind of trajectory is not because the monetary policy is hiking rates in quote. The financial condition is not fully responding to that. And again, there are even some counterproductive moves, even from the monetary authority, that is also not helpful to the so-called taming of inflation through tightening of policy. So by and large, hiking of rates is not palatable for business. But assuming the fiscal authorities and the monetary authority are also aligned their strategy, especially in terms of other interventions that has, because I said broad money supply is about 55 trillion. Those kind of liquidity are not outside of the banking coffers. It's not; those are not the. Those are the real liquidity that is driving inflation, not the 3.2 trillion that the CBN is mopping away. Then structural challenges that has not been addressed. So if we address all this, even though we hike rate to tame inflation, it's just be for a very short time, and the economy will normalize going forward.
Thank you so much, Damilare Ashimi. You head investment research, AfriInvest Consulting Limited. Thank you so much for your perspective.
Thanks for having me on the show.
Yeah, so I guess the battle against inflation continues at this time. We see central bankers still looking to hike rates in the global markets. We're seeing the U.S. Fed indications that they might actually slow with the rate hikes, since you see inflation is actually, coming down a little, but right here we're still seeing inflation rise on the African continent, and the central bankers are still quite hawkish at this time, and we definitely know that the markets do not like a hawkish Fed and raising rates. So at this time now, we move on to another conversation that's quite heavy on the African continent, and that's talking about debt. And this period is certainly a sensitive one for most countries as debt levels are rising rapidly. Government revenue squeezed in most parts of Africa. And just yesterday, we got that publication about some media houses claiming that Nigeria defaulted in debt repayment to China, and that has been cleared by the Debt Management Office. But joining me now is Mrs. Patience Niha, Director General of Debt Management Office, joining me via Zoom. Great to have you on the show.
Thank you very much. Good morning.
Good morning. So that publication yesterday definitely did cause a stir, and your office did put out a statement debunking it. But what's the state of Nigeria's debt to China at this moment?
Okay. Thank you very much for the opportunity to clarify the issue. If you don't mind, I would speak to your question directly, but also try to address several issues. So, but your introduction is quite right about rising debt levels across the world, not just Africa. And it was a major focus during the World Bank IMF annual spring meeting. So it is something that is global and not peculiar to Nigeria. Having said that, certainly we are monitoring debt levels, monitoring debt service numbers, and actively focused on revenues because, like we always say, that is the missing link, and the data does show that. So speaking about specifically about the China loans are actually a very small component of the total debt stock. Okay, so as of December, we had about 4.26 billion US dollars as loans from China out of a total external debt stock of 41%. So that's just 10%. The second important point to make, that's out of external, just 10%. And when you look at the total, it is much smaller than that at the total debt. Secondly, the China loans are concessional debt, like we say. So interest rates are below 3%, therefore length tenors of about 15 years. Okay, so these are the least cost financing or more borrower-friendly loans that we can get. I also like to add that it's unfortunate that we seem to focus a lot on China. But with the China loans, we can actually see a lot of the infrastructure that has been done with the loans. You look at the rail lines, you look at the airports. So we actually can see those borrowings tied to infrastructure. Okay, so the second or third thing I'd like to speak to is the issue around debt service. Just to sort of create a bit more awareness about the debt service process. So debt service doesn't just happen, okay? So they're projected for, because the debt data are kept electronically in the software, so they're projected and included in the annual budgets of the federal government, as well as the medium-term expenditure framework. So we don't, debt service figures don't just appear and then we are planning, how do we fund it? So they're projected, they are approved in the medium-term external borrowing program as well as the annual budgets. And internally, not just internally, involving other stakeholders, there are documented process for settling debt, whether it is external or domestic. There's a documented process. So one has been approved in the budget. Those debts are serviced as we don't, and there's no selective servicing of debt to say, okay, this one is to China, so we won't pay it. So that doesn't arise. Whether it's domestic or external debt, once they are due, the process is triggered and they are serviced. Okay, so debt service is not an ad hoc process. It is provided for and it is serviced. So I think we need to take away this notion of Nigeria has defaulted in debt service or it has defaulted to China. It doesn't happen, whether local, whether external. All debts are debts, and we process payments when they're due. So that statement is not correct. And I think just to sensitize those viewers who look at the budget and other statements, whether it is budget or budget performance. If you look at the annual budget, you will see previously you will see 3 lines: total debt service, external debt service, and domestic debt service. Now, for improved transparency, 2 additional lines have been added. This sinking fund, which we used to redeem promissory notes that have been issued by government. Then there's another line that is for the ways and means advances. So we have been extremely transparent with this and recognizing, not just anticipating, but planning for the redemption of, or for the honoring of our debt service obligations, which includes interest and principal. So Nigerians should please be aware that this is how it happens. So there's no default arising from that. Okay. And finally, if I may say, the missing link is revenue. So while debt service to revenue ratio is high, we do need to increase revenue so that that ratio would be much lower than where it is now. Thank you.
All right, thank you for clarifying that. But before I let you go quickly, you did mention the revenue issue, but is there any risk of default looking at our revenue at this time?
Well, I think I've clarified. Oh, no.
Hello, can you hear me?
Okay, yes. Okay, I just lost
yes.
picture.
So I was asking if there's any risk at all.
When you talk about debt default, I think we're not just watching and thinking this would happen. We're actively seeking to increase revenues, and those have been, I believe, shared with the public several times. So I think we should not just say, oh, okay, we're going to default. No, we're actively increasing revenues. But like I said in my earlier statements, this is an issue that the international financial community is looking at as a global phenomenon, and Nigeria is not isolated in this regard.
All right, thank you so much for clarifying things here. Ms. Patience Oniha, Director General, Debt Management Office. Thank you so much for clarifying the show today. Thank you.
Thank you for having me.
All right, so let's head on to the markets now. We have Ini John McQuarrie with the details, and Ini, I guess you can celebrate now. There's no default.
No risk of default.
Yes, Nigeria has not
I think yes,
defaulted in our China loans.
Yeah, that's good to know. But as Ms. Oniha says, the issue of revenue is what the country should actually be looking at. I think yesterday also we spoke to the NEPC CEO who is in China for Trade House launch and commissioning, and all of this is supposed to boost especially non-oil exports to increase our revenue and help us deal with our debts. I guess that's the
because
bigger
if the revenue matched the debt, they won't be talking about this.
Even a lot of people have said we don't have a problem of debts or spending, is a problem of revenue. We have, if we're able to meet up with what we are supposed to, we can just, I mean, even if it's 10% of our potential, we keep saying potential in Nigeria, potential in agriculture, potential in mineral resources, you understand? I guess that we will not be talking about debt and the risk of default at the end of the day.
But very sensitive period globally. Talking about
yes,
that levels.
Yes, it is. All right, let's look at the market numbers now. And what we see is that the equities closed in the positive yesterday at 0.08% up, even though we're still at 51,000, and equity cap at 27.87 trillion naira. I know that our major focus today is actually not on the market. It's more on, well, something a bit different. But let's look at the next slide there and see. Yeah, there you see banking recovered yesterday, thanks to UBA. A lot of the figures, like 3 of the figures, made it back up yesterday. Consumer goods had PZ right there, and that's why we see this positive. Insurance is also back. Oil and gas, however, is one area that we are supposed to look at because it ended in the red yesterday. But now we are talking about something a bit different. We're talking about the ETF listing by the Nigeria Capital Market, and we have joining us for that conversation Mr. Jude Chiemeka, Divisional Head Capital Markets, to tell us about this ETF and what NGX wants to do with it. Good morning, Mr. Chiemeka. So tell us about this ETF. What is about the listing and how it's supposed to affect me and my pockets?
Hi, good morning. I hope you can hear me clearly.
Yes, I can hear you.
All right, thanks for having us as always. So the ETF market is one of those instruments that investors can actually use to try and enhance the performance of their portfolios, especially institutional investors as well as retail investors. So exchange traded funds, as they're called, it's just a basket of securities that forms underlying assets that are listed on the exchange, and they trade pretty much in line with the other equity-based or fixed income-based instruments that are listed on the exchange, driven largely by demand and supply. So this instrument has grown over the years. We do have like 12 ETFs that are listed on our exchange. 10 of them are equity-based. We do have one fixed income-based and also commodity-based, which really helps as an alternative assets class for investors looking to diversify their portfolios. So the ETF clearly is one of those instruments that have really gained traction. I think the first ETF traded in 1990 in Canada, and since then it's grown in terms of adoptions globally. It's also important to point out that what we have seen is that since 2003, ETFs have really grown phenomenally from 276 to over 8,754 ETFs in the global space. So it's one of those assets that have grown significantly in the international money space and is beginning to gain traction and momentum in the Nigerian capital markets.
So what advantage does this ETF, what does it bring on board compared to other avenues, the money markets and all of that? What advantage does it have? And these 4 listings, what do they bring?
Great. So the ETF as an instrument, like I said earlier, just helps to diversify investment risk for investors, largely because it's a basket. And so areas such as where an investor is buying a particular security, and so the investor is left with the volatility associated with that security. But for an ETF, it's typically a basket of various securities that form the underlying assets. And so investors are able to manage their risk better. They're also able to get better returns for their portfolios. For instance, I mean, year to date, we've seen the all-share index struggle to be in the green territory, largely because of the increased NPR that's at 18%. So that's usually stress for the equities market. But you can see that some of the ETFs that we have listed, despite this, have been able to return close to 30%, in some cases 20%. And that is largely because it's a basket of various underlying securities. So the volatility associated with one security does not impact the entire portfolio. So investors are able to manage their risks better, and also they're able to invest at a much lower cost. For instance, the underlying assets, you have to invest in 5 securities to manage your risk. You're better off buying an ETF at a much lower cost. So the cost of purchase of an ETF helps also to manage the performance of the portfolio in the long run. But more importantly, I think for retail investors, it's just something that they need to pay attention to, because I think the major challenge has always been investor education. A lot of retail investors would typically prefer to hold on to individual assets. But for what we have seen, even in the global space, you tend to get more returns by diversifying your risk by investing in ETL, since it gives you that opportunity not just to lower your cost of entry, but also to help diversify your portfolio. And if there's adverse situation in one particular security, but it doesn't then impact the entire security that you have in your portfolio. So I think that the main advantage that you can see, even from the number we have in Nigeria, is that it is growing. And I thank you for highlighting this asset class. For investors really need to understand it, that it's better if you're thinking about the overall return on your portfolio to start thinking about using ETFs instead of going straight and just buying the underlying assets individually.
So we understand the part of diversifying the risks, but some people would say, wouldn't that make my profits also thin out? Instead of having the bulk profit from a singular stock, then I lose it because perhaps I had diversified to 5, and so I don't get as much profit as I should have.
Well, I mean, the statistics doesn't show that. I mean, it's interesting to go with that argument. But if you look at last year, the offshore index returned about 20%, which is really one of the leading exchanges return that you find globally. However, we had ETLs that returned over 203%. So for an investor, if you're really thinking about returns on your investment, you really need to pay attention to the ETF space. We had a new gold ETF, which is really an alternative asset class, returned over 30% last year. So it's important for investors to really begin to think about returns on their investments as opposed to being sentimental in holding on to names of companies that they are originally used to holding. It's just to look at it again from a different lens to understand that as an investor, return on your investment is key. And one of the ways to enhance that is to make sure that you have ETLs along the various asset classes that you're holding.
All right.
Now you have the fixed income space returning quite a bit, but you do have fixed income ETFs that will allow you to hold several fixed income instruments, and the fate of your return will be based on the overall as opposed to just one entity.
All right, Mr. Chemeka. Mr. Chemeka, I just need to get this in, and we'll make it briefly because it's time for the other market. The issue of technology. So even when we have these beautiful ideas and attractive highlights and profits and all of that, getting into the market sometimes is being discouraged because of the lack of enough technology is what I meant to say. So it's all the bureaucracy and paperwork discourages especially the youth from getting into the market. What are you doing about that?
Thank you for that. To be honest, the exchange has invested significantly in technology. We looked at the fourth industrial revolution. Even before COVID came, we had instituted minimum operating standards and, of course, our trading license holders to adopt significant and make significant investment in technology as well. And so today in our market, while brokers are able to trade via the VPN without necessarily coming to the floor, we've done that significantly well without a down day. And that shows the commitment to technology. So from an NGX perspective, we'll continue to invest in technology. We'll continue to enhance access to markets. We do have all kinds of touch points that will allow investors access to our market data to ensure that they're able to invest as at when they want to, in the manner that they want to do so. And so technology as a challenge for the market, to be honest, is what one is looking at in the past. But from the lens of where the exchange is and where we're going, technology will help to enhance market efficiency, market access, and better return for investors. And that is really what we're committed to doing at the exchange.
All right, Mr. Jude Chemeka, Divisional Head, Capital Market at the NGX. Thank you so much for your time. And well, we wish those new listings of the ETF.
Yeah.
I know that's where Ladi will be looking at next, Ladi, but I mean, let me...
You know me, I look at every market.
All right,
Thank
especially
you so much.
crypto.
Exactly.
Thank you so much,
Amy, there, giving us the details with the ETFs listings coming on the NGX. Now, let's head on to another market now that's entered neutral zone there, 52 points. That's what we see for sentiment in the crypto market now, from greed back to neutral. Hopefully it doesn't get back to fear. We see Bitcoin there losing that 30K level. So it looks like we're seeing a lot of pressure at this level, at that 30K level. And now the bears have succeeded in pushing the price of Bitcoin down to 28,915. We see Ethereum not left out of losing a level, lost that $2,000 level, down 6.54% this morning. Let's bring in Liman Damble now, a technical analyst, joining me via Zoom. Great to have you on the show.
Much for having me, Lodi. I appreciate it.
Yeah, so we see that 30K level is gone now. Looks like there's more down risk there for the price of Bitcoin, maybe 25,000. What's your technical analysis telling you?
Yeah, this was always inevitable, to be honest, because prices after they reached 31K were relatively overbought. So we saw the RSI essentially move beyond the 70 level, which historically is an area of overbuying. And since then, since hitting that resistance level of 31K, it did seem inevitable. The prices were going to fall to around 28,600 seems to be the floor. And if it breaches that floor, then I would say there's a potential for prices to potentially go towards 27K.
Right. So what levels are we looking at now for resistance levels for Bitcoin?
For resistance, I would say around 31. And what people sometimes don't see, of course, everyone was looking at the headlines when Bitcoin went to 31K and was looking at the next ceiling, and potentially people were talking about 35K, 40K. But historically, the last time Bitcoin did reach that 31K level, if you look at what transpired soon after, it was a similar sell-off. So essentially what we're seeing now is history just simply repeating itself. So in terms of the next resistance beyond that, you're probably looking at, if you're talking about the price potentially increasing, you're probably looking at like 35. But in terms of the upcoming floors, I'm looking at it more from that perspective. It does look like, I would say, 28,600, then you're looking at around 27,000 if the momentum continues to fall.
Looking at this drop right now, is it just profit taking?
Yeah, it does seem so. Again, typically when you do have this level of overbuying, traders essentially swoop in and just secure their gain. So it seems like that is what's happening now. Looking at the RSI, which is the indicator that I mainly focus on in terms of price strength, it is pretty much about to sit on a floor of its own around the 50 level. It's currently at 51.8. So if it moves below 50, then it may become something a bit more than profit taking, with those who are essentially seeing what was happening, the mass exodus before them, essentially joining that momentum and potentially taking prices to 27K.
All right, thank you so much, Element Danbell. Thank you for taking us through those charts that you have right there. Thank you.
Yes, thank you so much.
All right, so that's it there. We see the resistance and support levels for Bitcoin coming up. But look at the top gainers now. We see BitTorrent there, the old contract there, topping the counter 12.24%. We see Render Token also in the top gainers counter again, but almost $2 there, up 1.32%. And now you have stable coins getting on the top gainers counter, showing that investors are trying to get into stability at this time with all the volatility that we're seeing in the market today. So that's how the market is looking. Looking quite bearish at this point. Profit taking lost the 30K level for Bitcoin and the 2K level for Ethereum. So that's how the market is looking today. But looking out for what happens tomorrow in these markets. But that's the show today. Thank you for watching. Don't forget to join us at 1:30 for Business Incorporated for more updates and developments in the world of business. Thank you for watching. I'm Ladi Williams. Bye-bye.